Hey everybody, what's happening? Son of a Silver Stacker here. In today's numismatic news and information for the third day of October 2023, I'm going to take you over to a couple bullion dealers, the United States Mint website, talk about the bullion there, a coinnews.net article talking about the United States Mint bullion, as well as two articles about gold, one on Market Watch and one at Seeking Alpha. And then we're going to have an update on the paper currency, the Uncut Currency, and you won't even believe. I'm just, wow. Yeah. It's incredible, isn't it? But before all that, don't forget to like, share, and subscribe. Now over here to APMEX, gold is down $5.80 to 1838.80. Silver down 13 cents to 21.36. Platinum up 90 cents to 898.70. Isn't that something? It's still below $900 there. And palladium is down 340 to 1232.50. Now let's keep on keeping on. This is moneymetals.com, and you're looking at, bam, right there, that premium went up for those American Silver Eagles. And I think that the more silver takes a hit, the more that premium is going to go up, because let's face it, when did Money Metals buy all those American Silver Eagles? At what price, right? And if silver's going down, well, they can't charge as much there on the price for silver, but they can definitely charge you more on the premiums, that's for sure. Now, over here to the United States Mint bullion sales, here we go. And these, it says here sales total by month are updated every weekday by 5 p.m. Eastern time. And look what the Mint did. They actually added on October 2nd, numbers for September. Isn't that something? And I don't know what's going on, but there's definitely 18 million, about 18.5 million American Silver Eagles sold for the month, or for the year of 2023. Last year we were at 16 million, so we're a lot closer to 20 million. And easily, look at that, 700,000 American Silver Eagles for October. And even if we get 700,000 more, I think we're going to probably push closer to that 20 million. That'd be nice to see. But what does that mean for the premiums if, well, the price of silver goes down? So this is a really interesting balancing act that's happening in the precious metals market. Really is. And I don't know what to say about it other than put on your seatbelt, folks. This is going to be a bumpy ride. Gold and this is coinnews.net, October 2nd, 2023, and it is by Coin News. Gold and silver prices hit more than the 6.5-month lows at the start of October. Yeah, this is the start of the ride, I think. I think the price of gold and silver are going to fall precipitously for the next probably 6 or 7 months, unless something happens on a geopolitical level or the financial level with more banks closing down or shutting down or some kind of fiasco like that. I don't think that gold and silver are going to see any kind of resurgence in price. Now, let's keep on keeping on. Precious metals started a new trading week and month on Monday with losses ranging from 1% for gold to 4.6% for silver. Both metals established significant settlement lows, reaching back to March for both. Now, do you remember what happened back in March? Yeah, that was, I believe, the FTX, something or other happened on March 16th or March 15th. Yeah, that really created some movement in the precious metals market. That was a bank fiasco happening right there. Now, falling for the 6th consecutive session, gold for December delivery lost $18.90 to settle to $18.47 an ounce on the COMEX division of the New York Mercantile Exchange. That's the NYMEX for you and me. For a second straight instance, however, the settlement was the lowest since ending at $18.3460 on an ounce on March 9. And there you go, folks. So we're really getting close to those numbers that we had before the banking crisis. Now, here's an interesting quote here by Edward Moya. Gold's kryptonite is surging Treasury yields and a stronger dollar. Edward Moya, senior analyst, market analyst at Oanda, told Market Watch. Now, Wall Street is having a major reset on where cash flows are going. I imagine that's what he probably meant. And that is clearly not gold's way, he said. Fixed income is all of a sudden attractive, and that killed the short-term outlook for gold. Why are you going to use that language? Wow. No wonder we're such a violent society. Now, look at the language we use. Now, what are fixed incomes? Are they bonds? Yeah, maybe. Gold futures traded between 1842.70 and 1864.70. They lost 4.1% last week. Elsewhere, silver for December delivery tumbled more than $1 to 21.41 an ounce, marking its weakest settlement since closing at 20.50 an ounce on March 16th. There you go. There's that March number again. See, I'm telling you, that's a huge market mover that March month. That's, yeah. You remember what happened. I'm telling you. Silver futures ranged from 21.21 to 22.41 last week. They sank 5.9%. Now, there's some other precious metals prices on Monday. You got platinum and palladium. Those declined as well. All right. But really, it's the U.S. Mint bullion sales here we're going to talk about. On Monday, the U.S. Mint adjusted its bullion sales for September and published starting sales for October. And these numbers are actually really off, way off. The table below represents a breakdown of U.S. Mint bullion products sold, with columns indicating the number of coins sold, not total ounces, during different time periods. So I don't believe the United States Mint struck 209 million American silver eagles for the month of July, nor do I believe they struck 29 million for the month of September. I think you probably have to take a 0 out there and 2 zeros out there, and then you probably have a number that actually adds up to 18.5 million. And that's where we're at right now, folks. So let's go to that article from that we had the quote from Edward Moya. This is marketwatch.com. Gold appears headed for a death cross. Wow, there's that language again, violence in our language, just 5 months after teasing record highs. Who doesn't love getting teased, right? That's fun. Now, it says here, this is by, who was written this one? I think it's Myra Seifong. You can follow her here. This is updated October 2, 2023 at 4:41 p.m. All right, gold reached its lowest settlement since March, moving further away from the record high levels that were within reach just 5 months ago, short 5 months ago, right? Because let's face it, 5 months is nothing in the big picture, big scheme of things. With prices headed towards the so-called death cross, there's that language again, that could further lead to further declines for precious metal. Absolutely, I totally agree with that. I think we're going to have some major market meltdown with gold and silver. Meltdown, see, melt. That's probably a better term, right? Melting because you can melt gold. Anyway, gold's kryptonite is surging treasury yields and a stronger dollar. There you go again. Edward Moya, senior market analyst at Owanda, told Market Watch. Wall Street is having a major reset on where flows are going, and that is clearly not gold's way, he said. Fixed income is all of a sudden attractive, and that killed, there's that language again, the short-term outlook for gold. Now, that talks about December gold futures. Now, it says here the last time gold traded at such a low was over 6 months ago when the U.S. regional banking crisis triggered an influx of buyers. Now, Alex, FX Pro senior market analyst, said in market commentary Monday, then, as now, the pressure on gold came from rising U.S. government bond yields and a reassessment of expectations for higher long-term interest rates. Yeah, that's right. I think as long as interest rates are going up and inflation is going up, the United States, the Federal Reserve, actually, it's not a United States organization. Is it? Are they a governmental organization? Is the Fed part of the government? Or I don't even know. So confusing. So I guess when higher interest rates, happen, the dollar gets stronger and precious metals get weaker, generally speaking. Okay, not always, but that's generally the gist of it all. All right, the drop in gold prices followed a rise in early May to 2055, the second highest settlement on record, and the highest and for most active contract since August 6, 2020. Folks, there you go. That was about $20, maybe $30 to where the highest gold price ever was. But did silver follow that particular, I guess, pattern or trend? No, because we maybe got like $24, $25, and we know that the highest silver's ever been has been like $40, $44. So gold was way outperforming silver as far as getting to those all-time highs. Isn't that something? Now, it says here, gold prices now look to be closing in on reaching a death cross. There's that word again. That term is ugly. A technical term that generally indicates a bearish trend. Bears and bulls, right? Bulls and bears. Bears is, makes the market go down, and bulls, that's the market going up. One that occurs when an investment short-term moving average falls below a longer-term moving average. There you go. The 50-day moving average for December gold was 1948.34, while the 200 moving day average was at 1982.13 on Monday. Facts that data show. Bam, there it is. The last time gold market saw death cross, there's that language again, was in July 2022, and that led to 4 months of declining gold prices, then a very sharp rebound going into 2023. We know why, said Brian London, editor of Gold Newsletter. So death cross could signal more softness in gold and postpone the fall rally that many were hoping for. Absolutely, I totally agree with that. Rising treasury yields sparked gold's price dive. There it is again. Yields have continued to surge not only because investors are finally starting to believe that the Federal Reserve's determination to keep rates higher for longer, but also the U.S. Treasury is being forced to issue massive amounts of new paper into a market where traditional buyers are reducing their purchases, said Lundin. That's amazing. And Monday's dealings yield on the 10-year Treasury, there you go, we're up 4.674, up from 4.572 on Friday, after the U.S. government averted a weekend shutdown. So this keeps on going here, that gold is in a danger zone, and it will plunge below the $1,800 level if the 10-year Treasury yield rallies above 5%. Now, what happens when that goes to 10%, what happens to gold then? That's going to be the real question. If we get to 10% on that 10-year, watch out, I believe. Now, he expects gold to have its moment in the hot sun when the peak of the U.S. dollar is in place. So as soon as they stop interesting rates and the Fed does a pivot, that's when things are going to change for precious metals. On Monday, ICE U.S. dollar index DXY was up 0.6% at 106.87, around the highest levels of the year so far. There you go. Strength in the dollar can make dollar-denominated gold more expensive for foreign buyers. A rally towards $2,000, unlikely right now for gold, said Moya. However, upside could eventually target the 1925 region. There it is. That's the writings on the wall, folks. Meanwhile, London believes that gold price decline has been exacerbated by a trend following traders in gold futures piling on after forcing the price through support. There it is again. See, all this, they're telling us exactly what's going on. All right. While the price could go even lower, the selling pressure, gold is extremely oversold at this point, he said. Interest rates this high are unsustainable. That's right. And what happens when the interest rates stop going up? Yeah. That's when precious metals take over again. Today's global economy and financial markets were built upon a foundation of zeroed interest rates, and you can't follow that with the steepest, harshest hiking cycle in history without breaking something, he said. The chances of a market event forcing the Fed to pivot are actually higher now than ever before this hiking cycle. Bam! There it is. A Fed pivot could come at any time, and that's way a bet on gold and these oversold levels could pay off handsomely, said Lundin. There you go. Now let's keep on keeping on. I'm not running out of too much time. Yeah, I am actually. I'll just mention what this is all about. So this is a historical perspective about gold and how many parallels we're actually seeing right now as we did then, okay? And it's got like 6 reasons. Number 1, they start off with a conclusion. I thought that was really funny. Number 2 is down here. Rise of gold prices in January. Gold prices rose dramatically in December 79 and January of 80 due to 2 reasons. Geopolitical, because the Soviets invaded Afghanistan. And then we had the Iran hostage crisis. Then we had inflation fears. Inflation in the U.S. had been on a rise in the late 70s and had risen to an all-time high of plus or minus, looks like 13% by December 1979. Gold prices had been rising with inflation as measured by CPI year over year, though the rise in inflation wasn't the primary reason for gold spike in January of 80. There you go. Fall of gold prices from January 80 onwards, and this is where it gets really brutal. Gold prices fierce correction from January to March 1980 and downtrend from then onwards were caused by, here we go, interest rate hikes by Paul Volcker to subdue inflation and resultant CPI's downtrend from March 1980 onwards. There you go, folks. And I think we're paralleling that. We parallel here with the Soviet invasion of Afghanistan. We got the inflation, we got interest rates. This talks about silver and I believe the March 27, 1980, the Hunt brothers couldn't pay $100 million margin call on their positions, and panic spread to the futures market in general, fearing that there would be systemic impact by their default. Yeah, isn't that something? This is an interesting article. I will leave a link in the description. You got to check that out. Now, let's head over here back to the United States Mint. This is the Uncut Currency about this video I did yesterday. Look at this. There's only a few products available left for you to purchase. So we got the 8-note $100 sheet right there. You got that 5-note sheet. I'm surprised that that's even still available, considering the price is very reasonable. But look at this. If we go a little further, yeah, only 5 products available. The rest of them are not available on Remind Me status. And I showed you yesterday, and every single one of these was available. So it looks like everybody went gonzo buying those particular Uncut Currency products from the United States Mint's Bureau of Engraving and Printing. Isn't that something? Now, over here to the plus ones. Bam! This is Proverbs 25, 16, and 17. And it says here, when you find honey, eat what is sufficient for you, lest you be satiated and vomit it up. Let your feet be scarce in your fellow's house, lest he be satiated with you and come to hate you. Ouch! And basically what I think that means, don't burden good friends with too many visits, and this goes for anything, I believe, because too much of a good thing is not a good thing. Now let's head over here to 39's Fine 99.9 KOIN Coin News Radio. This is I Want to Be a Cowboy by Boys Don't Cry. This is, I think, from 1986, and this is the 12-inch club remix. It is pretty cool. Now, with that said, folks, I want to thank you all for coming. Thanks for dropping by. Don't forget to hit the like button. And if you do like what you hear and see, sub the channel. It's free. Stack around.